Okay. Good morning, everyone. So our today's topic is provision for filing return of income and self-assessment. Okay. Now, see, you have studied how to calculate the final tax liability, how to calculate advance tax, how to deduct TDS, etc. Right? And you have already studied the headwise calculation of your income. Now we have calculated our income, our tax liability. We are already paid our tax liability. Now how government will know that that much is our income and that is our tax liability on that income? So for that, you need to file income tax return. You need to file income tax return. Okay, so by way of income tax return, you are informing government about your income, about your tax liability, about heads of income, etc. Okay, so let us discuss. In this chapter, we will discuss who is required to compulsorily file return of income. If you are having loss, then also you have to file return of income. Belated return. Say for example, the due date for filing return of income is given in the Act. Now you miss the due date. Then you can file the late return. That is called belated return. So what is the time limit for filing late return? That we will discuss. Revised return. Now what is revised return? Suppose we have already filed our return of income and after filing we realize that there was some mistake in the uploaded return. Then we can rectify the same and we can file revised return. Updated return. Updated return means, say for example, the due date for filing revised return has expired. Now, what can we do? In that case, we can do updated return. Next is defective return. Defective return we'll discuss on later part. In defective return, the assessing officer analyzing our return will provide the notice if there is any defect identified by the assessing officer. What is the default in interest for default in furnishing return of income? If you are filing late return after due date, then what will be the interest that we will discuss? What will be the late file that we will discuss? Transaction in which the Aadhaar is mandatory, PAN is mandatory. Okay, so these are the main content of our today's topic. How to pay self-assessment tax, how to pay tax on updated return. Then there is one scheme of submission of return through income tax preparers. Okay, so how can we file the return through income tax preparer? That we will discuss in this chapter. Okay, next is now what is return of income that I have already explained. And for different kind of assessee, different kind of returns are given. There are 7 forms, that is ITL 1 to ITL 7. There are 7 forms, that is ITL 1 to ITL 7 for filing return of income. So different form is applicable in different case of assessees. Say for example, if you are having only salary income, then you need to file ITR 1. Okay. The Income Tax Act contains the provision for filing return of income. Return of income is the format in which the assessee furnish information as to his total income and tax payable. The format of filing return by different assessees is notified by CBDT. Say for example, if you are an individual and you are having business income and you are not obtained for presumptive taxation. You are not obtained for presumptive taxation. Okay, then in that case you need to file ITR 3. Say for example, if you are having business income and you are opted for presumptive taxation, then you need to file ITR 4. In return, we mention our total income, our gross total income, our head-wise income, deduction, claim from the income, that is deduction under Chapter 6A, tax liability, how the taxes are paid, all the details are uh, we need to given in the return. Okay. Now let us discuss section 139 subsection 1, that is compulsory filing return of income. So who is required to file return compulsory? So as per section 139(1), it is compulsory for companies and firm to file return of income or loss for every previous year on or before the due date prescribed in the due date prescribed. Okay. So in case of company and firm, even if they are having loss or even if they are having 10,000 income, they need to file return of income within the due date prescribed in the act. Okay, within the due date prescribed in the act. So company and firm are mandatorily required to file return of income. Next is now other than company. Or firm. So individual and HUL. So in case of person other than company or firm, that is in case of uh, individual and HUF, they have to file return of income compulsory within due date if their total income, that is income before providing deduction under Chapter 6A. That is income before providing deduction under Chapter 6A exceeds the basic exemption limit. Exceeds the basic exemption limit. Now, what is basic exemption limit? So, in case of an individual, it is 2,50,000. In case of senior citizen, it is 3 lakh. And in case of super senior citizen, it is 5 lakh. So, before providing deduction under Chapter 6A, that is 80C to 80U, if your income is more than 2,50,000, then during the previous year, then you have to file return of income within due date prescribed in the Act. Clear, everyone? So in case of company and firm, they have to file return of income even if their income is 10,000 or even if they are having loss. In case of person other than company and individual, that other than company or firm, that is in case of individual or HUF, they need to file return of income if their income during the previous year exceeds basic exemption limit. But this income we have to consider before claiming deduction under Chapter 6A. Is that clear, everyone? Yes or no? Please reply fast. Everyone? Okay. So next is every person being resident other than not ordinarily resident in India within the meaning of Section 6, subsection 6. That is person resident and ordinarily resident in India. Suppose in case of an individual, if their income during the previous year is less than 2,50,000, say for example, a person is having income of rupees 1 lakh, that's it. Okay, then as per the above provision, he has not required to file return of income, right? But if during the previous year at any time, if he has the following, if he fulfill the following criteria, that is A and B, then he has to file return of income even if his income is less than 2,50,000. Now, what are that criteria? So, A, hold as a beneficial owner or otherwise any asset, including financial asset, interest in any entity located outside India, or has a signing authority in any account located outside India. See, say for example, Mr. X is having 1 lakh rupee income during the previous year. Now he is having one bank account in USA. So even if his income is less than 2,50,000, he has to file return of income. Why? Because he is having financial interest or he is having account signing authority in any account located outside India or is a beneficiary of any asset. Now, what is the meaning of beneficial owner and beneficiary? So it is given. See, beneficiary. First I'll explain beneficial owner. So beneficial owner means a person who is providing consideration, for purchase of any asset. Okay, and beneficiary of asset means who derive benefit from that asset and who has not paid any consideration for receiving that benefit from the asset. So that person is called as beneficiary of asset. Okay, so if you are beneficiary of any asset located outside India, then also you have to file return of income irrespective of your income earned during the previous year. Okay, but say for example, the beneficial owner and beneficiary are different person, and beneficial owner has already reported that income in his return of income and filed the return of income, then in that case, the beneficial owner is not required to file return of income. Is that clear, everyone? In next page, the chart of beneficial owner, beneficiary, and the provision discussed is given. Yes, voluntarily you can file return of income even if your income is less than 2,50,000. Voluntarily you can file return of income even if your income is less than 2,50,000. Clear, Sushil? Now, being an individual HUF, AOP or BOI, your income, whose total income or total income of any other person in respect of which he is assessable. That means clubbing. That means clubbing provision. You are responsible for paying tax on someone else's income. So that is possible only by way of clubbing, right? You have already know all the provision of clubbing. Without giving effect to the provision of chapter 6A or section 54, 54B, D, EC and F. So you have to check 2,50,000 basic exemption limit without considering deduction under chapter 6A and without giving effect to section 54 to 54F. Clear? Then they have to file return of income compulsorily. Now in next para, the basic exemption limiters are given. So 2,50,000 for individual HUF and 3 lakh in case of senior citizen, 5 lakh in case of resident individual who is super senior citizen. Everyone clear up to this? Yes or no? Now, any person other than company who is not required to furnish return under section 139(1), that is, say for example, all the above criteria that we have discussed are not applicable. Then also they have to file return of income in the prescribed form on or before the due date, if the following criteria are fulfilled. There are 4 criteria. First is, if he has deposited an amount exceeding 1 crore or more in current account. So if you are deposited 1 crore or more in your current account, then you have to file return of income during the previous year. Next is, has incurred expenditure of an amount or aggregate of amount exceeding 2 lakh for himself or any other person for travel to foreign country. Say for example, your income is say for 1 lakh rupees and you are incurring expenditure of 2 lakh 5,000 for foreign travel. Then also you have to file return of income. Say my income is less than 2,50,000. I don't have any financial asset outside India, or I am not beneficial owner of any asset situated outside India. But I have incurred the expense of foreign tour worth rupees 2,05,000, that is more than 2 lakh. I have to file my return of income for the previous year within due date in the prescribed form. Has incurred expenditure of an amount or aggregate of amount exceeding 1 lakh towards consumption of electricity. Now, say for example, if you are paying bill of electricity bill more than 1 lakh, then also you have to file return of income even if your income is less than 2,50,000. Or such other condition as may be prescribed. Now, what are the other conditions that is given by the CBDT that we'll discuss? Just go through once up till now. So now what are the criteria given by the CBDT? So if the above conditions are not fulfilled and if your total turnover from business or gross receipts from business greater than 60 lakh. Second, if you are in profession and your profession receipts are greater than 10 lakhs during the previous year. Third condition is, if your TDS deducted, the amount of TDS deducted or TCS collected are more than 25,000. Then you have to file return of income within due date. The 25,000 TDS TCS is 50,000 in case of person who is senior citizen. And fourth condition is, if you are deposit in saving account during the previous year, is greater than 50 lakh in all the saving account. Okay. Then you have to file return of income within due date, compulsory. So now what are the criteria we have discussed for filing return of income? First, if your income exceeds, in case of company and firm, they have to compulsorily file return of income. In case of other than company and firm, if income exceeds basic exemption limit, then they have to file return of income. That basic exemption limit is without considering deduction claim under Chapter 6A or section deduction claim under Section 54 to 54A. Then they have to file return of income. If their income is less than basic exemption limit, but if they are having any asset situated outside India or any signing authority in any bank account located outside India, they have to file return of income. If they are beneficiary of any asset located outside India, then they have to file return of income. Then other than that, if you are depositing more than 1 crore in your bank account, current account, then also you have to file return of income. If you are incurring foreign expenditure, foreign tour, more than 2 lakh rupees, then also you have to file return of income. If you are paying electricity bill more than 1 lakh during the previous year, then also you have to file return of income. Other than that, if you are having business and your turnover is more than 60 lakh during the previous year, in case of profession, if it is more than 10 lakh, then also you have to file return of income. Yes or no? Other than that, if the TDS deducted during the previous year is more than 25,000, or in case of senior citizen, if it is more than 50,000, then also you have to file return of income compulsory. Right? Or if you deposited in your saving account more than 50 lakh rupees during the previous year, then also return filing is mandatory. Everyone clear up till now? Now, what are the due dates for filing return of income? So there are 3 due dates: 31st October of assessment year, 30th November of assessment year, and 31st July of assessment year. Okay, so there are 3 dates. Now, who is required to file return up to 31st October of assessment year? So a company. If the assessee is company, then the due date for filing return of income is 31st October. Person other than company, so individual, HUF, firm, AOP, BOI, trust, so they have to file return of income up to 31st October of the assessment year if their accounts are required to be audited under Income Tax Act or under any other law for the time being in force. Other law means, say for example LLP hai, so if the audit of LLP is required to be done under LLP Act or under Income Tax Act. Okay, then the return due date is 31st July. Say for example, if you are a partner of a firm and if the partnership firm is required to get its books of account audited, then the due date for filing return of partner is also 31st October. Okay, so who is required to file return up to 31st October of assessment year? So first is company. In case of other than company, whose accounts are audited under Income Tax Act or any other law, and a partner of a firm whose accounts are audited under Income Tax Act for the time being in force. Okay. So the due date for them is 31st July. _30th November of assessment year in case of assessee including partner of firm being such assessee who is required to furnish report under section 92E. Now what is section 92E? 92E is transfer pricing section. It is not applicable in your syllabus, but if you are entering into any foreign transaction, any foreign financial transaction with your associated enterprise or subsidiary, then you have to report that transaction in form 3CEB, that is transfer pricing audit. Okay, and to whom the transfer pricing audit is applicable, the due date for filing return of income is 30th November. Okay. And in any other case, 31st July. So say for example, if a person is having only salary income or having all five heads income, but his accounts are not required to be audited under Income Tax Act, then what is due date of that person for filing return of income, everyone? Say for example, I am having income from house property, income from salary, income from other sources, income from PGBP. But my books of accounts are not required to be audited. Then what is the due date for filing return of income in my case? So let me know, everyone, quickly. What is due date in my case? It is 31st July, right? Now, chalo, let us discuss illustration number 1. Paras, aged 55 years, is a resident of India. During financial year 22-23, instead interest of 2,88,000 was credited to his non-resident external account with SBI, that is NRE account. See, if you are resident and if earlier you are if earlier you are a non-resident, then you can maintain the NRE account with the approval of RBI, and interest from NRE account is exempt. Okay, so he is having interest of 2,88,000. Exempt income is not part of your total income. Okay, I hope everyone is clear with that. 30,000 being interest on fixed deposit with SBI was credited to his account, saving account during this period. He also earned 3,000 as interest on this saving account. Is Paras required to file return of income? Chalo, as per the first question, is he required to file return of income? Sushil, in my case, the due date was not 31st October because my accounts are not required to be audited. So the due date is 31st July. There. Sure. Say for example, we assume that he has approval of RBI to maintain the NRE account and the interest from NRE account is exempt. So now what is the taxable income of Mr. Paras? So it is 30,000 fixed deposit interest and 3,000 FD interest. So it is less than 2,50,000. So he is not required to file return of income. What will be your answer if he has incurred 3 lakh as travel expenditure for self and spouse to US to stay with his married daughter for some time? So in that case, he has incurred more than 2 lakh rupees for foreign travel expenditure, right? The foreign travel expenditure is 3 lakh rupees. That is more than 2 lakh. So in second case, he has to file his return of income. Is that clear, everyone? Now, say for example, if we assume that he has not approval of SBI and that 2,88,000 NRE interest is not exempt, then in that case, his income is 2,88,000 plus 30,000 FD plus 3,000 interest. So it is more than 2,50,000, right? So in first case also, he has to file return of income, compulsory. Clear, everyone? Just go through the question number 1 quickly. And if you are having any doubt, just let me know. Just go through question number 1, everyone. Clear everyone? Next is interest for default in furnishing return of income under section 234A. Krishna, 30th November is for those individuals to whom they entered into international transaction with their associated enterprise or subsidiary company. Now suppose you fail to furnish return of income within due date. Okay. So in that case, on the outstanding tax amount which you are paying after 31st July. Say for example, in case of Mr. X, the due date is 31st July for filing return of income. And say for example, his tax liability is 1 lakh. Okay. Now Mr. X has not filed return of income up to 31st July. Say for example, he filed the return of income on 30th September. So the return is filed 2 months late. Yes or no? 2 months late. Then in that case, he has to pay 1% per month interest for 2 months. That is August and September. Under section 234A for default in furnishing return of income. For default in furnishing return of income. Say for example, Mr. X, due date for filing return of income in case of Mr. X is 31st July. His tax liability comes to 1 lakh rupees and he has not filed return of income even, and he has not paid any taxes up to 31st July. So if a person fail to file return of income and fail to pay taxes up to due date, then he has to pay 1% simple interest per month or part of the month from the due date, that is in our case July. So from the end of 31st July, that is from 1st August to the date of payment, that is up to 30th September, he has to pay 1% per month simple interest on tax due. Okay. Now, where no return has furnished. So if the assessing officer has made the assessment, then up to the date of assessment, he has to pay 1% interest per month. Is that clear, everyone? Now, say for example, if you are not filing return of income, but you have paid all the taxes before 31st July, then on the taxes paid before the due date, no interest under section 234A shall be charged on self-assessment tax paid by assessee on or before the due date of filing return of income. So whatever amount you have deposited to the account of government up to 31st July, no interest under section 234A is leviable. Clear? Now next is, everyone clear with 234A, yes or no? Please reply fast. Everyone clear with section 234A, yes or no? Okay. Now, if you are filing late return, that is after due date, then you have to pay late filing fees. That see, in TDS return also 200 per day, the late filing fees was there. So in case of income tax return also, if you are filing late return, that is after the due date, then you have to pay 5,000 as late filing fees. 5,000 as late filing fees. But say for example, if your income does not exceed 5 lakh rupees, if your income does not exceed 5 lakh rupees, then the amount of fees is restricted to 1,000. Yes, the Darshan, both are required to pay interest as well as fees. Manisha, if you are filing late return, then you have to pay interest under section 234A from the after the date of return filing, that is after the due date to the date of payment of taxes or date of furnishing return of income. And if no return has filed, then if assessing officer make the assessment, that assessing officer has passed the order that much your income and that is your tax liability, then up to the date of that assessment order, you have to pay interest under section 234A. Interest is calculated on tax due amount, that is the total tax liability minus advance tax minus TDS minus TCS, everything. Okay, fair Bhumika, that is your point number 3. Please reply fast, Manisha and Bhumika. Okay. Now the specified class or class of person to be exempted for filing return of income. So government has power to provide the by way of notification the class or class of person who is not required to file return of income, just like we have studied section 194P. If specified individual is having only income from interest, only in having interest and pension income and the same are credited in the same bank account, then if they provide the declaration to the bank, then bank will deduct TDS under 194P and they are not required to file return of income. Okay, so the government, the CBDT has power to mention such class or class of person who are not required to file return of income. Return of loss. Now you cannot say that my income is zero because I am having loss and I am not required to file return of income. You have studied in the chapters set off and carry forward of losses. If you want to carry forward loss, then you have to file return of income within due date. Okay, so even if you are having loss, you have to file return of income within due date. Otherwise, you cannot carry forward the losses and cannot set off the same in subsequent year. No, Sushil. Then late filing fees are not leviable. So say for example, business loss is set off against the business income in subsequent year up to 8 years, right? But if you want to carry forward your business loss, then you have to file return of income within due date. Okay. Only two loss, that is loss under the head income from house property and unabsorbed depreciation can be carried forward for set off if return has not been filed within due date. Other than that, other than house property loss and unabsorbed depreciation, say for example, you are having loss from capital gain, then you have to file return of income within due days to carry forward that loss. Otherwise, you are not eligible to carry forward the losses. Okay. And you cannot say that the assessing officer has not issue a notice to us for filing return of income. That is not a valid excuse for non-filing of return of income. Is that clear, everyone? Everyone clear with return of loss? Yes or no? Everyone clear with return of loss? उसमें ऐसा दिया है कृष्णा कि CBDT has power to notify the person who are not required to file return. So they have notified only one category, that is specified person 194P जिनको applicable है till date. Okay. Now belated return. If you miss the due date for return filing, then you can file the late return, that is called as belated return. Then you can file late return, that is called as belated return. Now, what is the time limit for filing belated return? So before 3 months prior to end of assessment year. So say for example, for assessment year, before 3 months prior to end of relevant assessment year or before completion of assessment, whichever is earlier. Before 3 months prior to end of relevant assessment year. So say for example, for previous year, 22-23, assessment year 23-24 is applicable. Yes, Mohammed. In case of belated return, you cannot carry forward losses. So before 3 months prior to completion of assessment year. So assessment year is completed on 31st March 2024. So before 3 months, that is 31st December 23. So you can file late return to 31st December 23. Hey, Bhumika, I don't get your question. Yes, Bhumika, he or she has to file return of income every year for carry forward of loss. हाँ दर्शन, ऑब्वियस चीज है ना कि फीस और इंटरेस्ट तो लगेगा ही लगेगा. Everyone clear with belated return? So you can file late return before 3 months prior to end of assessment year or completion of assessment. Assessment completion का मतलब होता है the notice are issued by the government and the assessing officer will determine your income, etc. That and provide the assessment order. That is completion of assessment. So before that date or before 31st December 23, you have to file return of income. Belated return. If you miss the due date. Clear? Now revise return. Suppose while filing return, suppose you have filed original return or belated return and you discover the mistake in the original return or belated return, then you can also revise the return. Say for example, at the time of filing, I forgot to take the one FD interest from the bank as my income. Okay, and after filing return, I realized that I missed the one FD interest income. So I can revise my return of income. The due date for revised return is also same. 3 months prior to end of relevant assessment year or before completion of assessment, whichever is earlier. You can file revised return. If see, original return, that is return filed within due date, or belated return, that is return filed after due date, both can revise. Both can revise provided the return can be revised before 3 months of end of assessment year or completion, whichever is earlier. It is not duty of CPGT to inform each and every individual. It is everywhere. If you are having PAN and your PAN is registered on income tax portal, then government will give you every time the email for filing return of income. Everyone clear with revised return? Yes or no? So here the summary is given. Everyone clear with revised return? So any return filed under Income Tax Act can be revised at any time, but before 3 months, from the end of assessment year or completion of assessment, whichever is earlier. Clear everyone? Can we discuss illustration number 2? Explain with brief reason whether the return of income can be revised under section 139 subsection 5 of Income Tax Act in the following cases. Belated return. Yes, I have already explained belated return can also be revised, but provided the return can be revised prior to end of 3 months from of assessment year and completion of assessment, whichever is earlier. Second question is, return already revised once under section 139(5). Then if you have filed one revised return, then you can file another revised return. Yes. Within due date of revised return, you can file revised return multiple times. Okay, so you can rectify your errors in return for multiple times. But the only condition is before due date mentioned in the section. Krishna, return of loss is a simple return. You have to file within due date for carry forward of losses. So if you are having return or loss, then it is called as return of loss. So for carry forward of losses, you have to file return within due date. Return of loss filed under section 139(3). Obviously, return filed under section 139(3) can also be revised. It is deemed to be filed under section 139(1), that is within due date. Clear everyone with illustration number 2? Yes or no? Please reply. Up till now, everyone clear? Yes or no? मोहम्मद बाकी है उधर, शांति रखो थोड़ा. Self-assessment tax is paid by you after completion of previous year. After completion of previous year, whatever amount you pay to the government towards tax, that is called as self-assessment tax. Clear, Mohammed? Now, what are the particulars you have to file along with your return of income? What are the data you have to file in your return? So the income exempt from tax, what is the exempt income that you have to mention? Assets of asset of the prescribed nature and value held by you. Say, for example, if you are having foreign asset, then you have to report the same to the government that I am having a foreign account or anything, whatever. Bank account, detail of all the bank account or credit card held by you have to report that in your return of income. If you are incurring certain expenditure that is prescribed under the return for more than the amount mentioned in this act, then also you have to report the same and the data prescribed by the CBDT. Particulars to be furnished with return of income in case of an assessee engaged in business or profession. If you are having business, then what are the data you have to provide? So you have to provide the audit report under section 44 AB. If your books of accounts are audited, your principal place of business, your branches, address of all the branches you have to report in your return. If it is a partnership firm, then name and address of each and every partner you have to report. If it is an association or body of individual, then the detail of all the members you have to mention in the return of AOP or BOI and their shares in the AOP or BOI. Your principal place of business, that is address of AOP BOI, and if you have any branches, then the details of that branches also you have to file under the Income Tax Act. Is that clear, everyone? It is in initial chapter, Kavita. Now, option to file updated return of income. This provision is recently introduced. Updated return last to last budget. See, say for example, if you miss the return of filing return of income within due date, if you miss the due date for belated return, okay, now after belated date of belated return, you cannot file return of income. Okay, so say for example, for assessment year 23-24, the due date for return is 31st July 23. And you can file late return up to 31st December 23. But you missed this date also as well as this date also. Okay. So now the window will locked and you cannot file return. So for that purpose, the concept of updated return is given. You can file updated return within 24 months from the end of relevant assessment year. But for filing updated return, you have to pay additional tax. You have to pay additional tax, that is tax over and above your tax liability, over and above your interest, over and above your late filing fees. You have to pay additional tax for filing updated return because you missed the due date. So for assessment year 23-24, you can file updated return up to 31st March 26. But provided you have to pay additional taxes. Now, say for example, you already filed your original return within due date. That is the person, say for example, Mr. X has filed return of income for assessment year 23-24 on 30th June. So it is within due date. Now, after 31st December 23, he realized one mistake in his return. Now, what he can do? Now the date for revised return is lapsed, right? Because revised return can also be filed up to 31st December 23, but he realized the mistake in the return on, say for example, 31st January 24. then also he can file updated return. Okay, and he can correct the mistake in the original return or revised return. But for updated return, you have to pay additional taxes. Hi, Darshan. Now, who cannot file the updated return? So, if your updated return is a return of loss, if your updated return is return of loss, then you cannot file the updated return. So, if there is increase in loss, you are not eligible to file updated return. See, basically, the concept of updated return is introduced for those individuals whose tax liabilities are due and who miss the return filing. Okay. Now, if you have already filed the return of income and by way of updated return, your tax liability will get reduced, then also you cannot file the return. And if you have already filed the original return and because of updated return, your refund due get increased, then also you cannot file return of income. And if you fail to file return of income and there is a refund, then also you cannot file updated return. Okay. So the concept of updated return is basically for payment of taxes. It is applicable to those who is required to pay taxes. Then also then only updated return can be furnished. Updated return cannot be furnished if assessment proceedings are initiated in your case or for such class or class of person as notified by CBDT. Clear everyone, updated return. Now say for example, the original return is a return of loss. Say for example, the example is given here. Say for example, in original return, there is a loss of 5 lakh. Okay. And in updated return, the loss converted into the income. Because of some mistake, I claim the loss, but actually there was no loss, there is an income. So I can file the revised return because my original return was return of loss, but the updated return was return of income. So there is obviously the tax liability was there, right? Clear everyone? Everyone clear with updated return? Now, say for example, if you updated the current year return and subsequently your carry forward of loss is decreased, then in subsequent year also you have to file the updated return. Everyone clear with updated return? Yes or no? Please reply fast. Everyone, yes or no with updated return? Please reply fast. Next is defective return. If assessing officer, while checking your return, for layman language, while checking your return, for technical language, while processing your return, identify any mistake in your return. If assessing officer, that is income tax officer, is identify any mistake in your return, then he will give you notice to correct that mistake within 15 days. Within 15 days from the date of intimation, that is from the date of notice. Okay, so you have to correct that mistake within 15 days. And if you are not able to correct that mistake within 15 days, then you have to make an application to assessing officer for further extended period of 15 days. Okay. Now, if the mistake is not rectified within 15 days or such other period, extended period given by the assessing officer, then your return will be treated as invalid return and it is to be considered as the assessee has failed to file return and has not filed the return. Okay, so whenever you receive the notice of defective return, then you have to compulsorily correct that mistake. Otherwise, your return is considered to be invalid return. If you can correct the mistake after 15 days and assessing officer agreed to consider, then he can treat the return as valid return. The return is not considered to be defective if you have provided all the details, annexures, columns, each head you have calculated proper tax liability, you have calculated proper income, then your return is not considered to be a defective. But if you miss something, then your return is considered to be a defective return. Okay. So if you have mentioned all the data, all the details, or if you attach the audit report, if your books of accounts are audited, then your return is not considered to be a defective return. If regular books of account are maintained by the assessee, then your return should be accompanied by manufacturing account, profit and loss account, trading account, partners detail, proprietary detail, etc. Okay, if your return is not attached with manufacturing account or pre-P&L or balance sheet, then your return is considered to be a defective return. So for that, you have to provide all the details. If the cost audit is applicable, then you have to provide the date of cost audit report, the name of cost auditor. If you fail to provide that data, then also your return is considered to be a defective. Now, say for example, you are opting for presumptive taxation, so maintenance of books of account are not compulsory. So in that case, you have to provide the details of turnover or gross receipt, gross profit, expense, and net profit. If you fail to furnish the above details, then also your return is considered to be a defective return. Anil, you are confusing. Defective return is possible when the assessing officer gives notice to you. Then only you can file the correct return against the notice of defective return. First thing. Second thing is, if you file the late return, that is belated return, you can update your return provided there is an increase in income, there is increase in tax liability. Because of updated return, if your tax liability get reduced, then you cannot file the updated return. Clear? It is not together. Clear? Anil? Yes or no? Please reply fast. Next is permanent account number. So who is required to apply for PAN and time limit for making such application? So whose income during the previous, voluntarily you can apply for PAN at any time. Okay. But who is compulsorily required to apply for PAN, that is given here. Voluntarily you can apply at any time for PAN. Now, if during the previous year you are not having PAN and your income exceeds the basic maximum amount not chargeable to tax, that is basic exemption limit, then you have to apply for PAN before 31st May of the assessment year. So say for example, during you are not having PAN and during previous year 20 to 23, if your income is 3 lakh, that is more than basic exemption limit, then you have to apply for PAN up to 31st May 23. That is 31st May of the assessment year for which such income is assessed. If you are carrying business and during the previous year if your turnover or gross receipts are likely to exceed 5 lakh, then before the end of that financial year, you have to apply for PAN if you are not having PAN. If you are entering into any financial transaction worth rupees 2,50,000 or more, then before 31st May of the immediately following financial year, you have to apply for PAN to the assessing officer. If you are a director of a company, partner, trustee, founder, karta of HUF, CEO, principal officer of company, then you have to apply for PAN before 31st May of the following financial year, before entering into the above transaction. If you have to pay any taxes under the Income Tax Act, then the PAN is mandatory. Without PAN, you are not able to pay your taxes. Without PAN, you are not able to pay your taxes. So for the payment of tax, PAN is mandatory. If you are entering into any transaction and say for example, government notify that transaction that for entering into for that transaction, the PAN is compulsory, the assessing officer may give you notice for allotment of PAN. PAN, that is permanent account number, is 10 alphanumeric character, and the PAN is mandatory in all the return filed by you at income tax portal, all the payment of taxes through challan for income tax, and all the documents notified by the CBDT. The mandatory PAN is mandatory to mention on that document. Okay, and even without PAN, your TDS will also be deducted at higher rate, and you are not able to get the credit. Okay, so PAN is mandatory. Now, what are the transactions under which the PAN is mandatory? That is given. Let us discuss the one by one the transaction. But up till now, everyone clear? I'll give you 2 minutes. Just give me a reply. After that, we'll discuss the transaction under which the PAN mentioning of PAN is compulsory. Everyone clear up till now? Yes or no? Yes, Mohammed. By way of updated return, he can file the earlier previous year return. But provided the 24-month has not been completed after the end of previous year, after the end of assessment. So you cannot file return of assessment year 15-16 as on date, because 24 months from the end of relevant assessment year has lapsed. But updated return is you can file updated return if there is a tax liability. If there is a refund, you cannot file updated return. And for filing updated return, there is an additional tax you need to pay. Say, for example, my tax liability comes to 1 lakh rupees, then 1 lakh plus additional tax 25% I have to pay. That I'll discuss. What is the amount of additional tax you need to pay at the time of updated return. But along with your original tax liability, you need to pay some additional tax for updated return. Clear? Sure. Let us discuss the transaction in which the mention of PAN is mandatory. Sale or purchase of motor vehicle. other than two-wheeler. So other than two-wheeler, if you are purchasing any motor vehicle, that is three-wheeler, four-wheeler, then you have to provide your PAN. Then mentioning of PAN is mandatory, all transaction. Opening of bank account other than normal saving bank deposit account, you have to provide your PAN. Say for example, if you want to open current account, PAN is mandatory. If you want to deposit, PAN is mandatory. Making an application to any banking company or cooperative bank to which banking regulation act is applicable for issuance of credit card or debit card. So if you are making an application for allotment of debit card or credit card, then PAN is mandatory. Opening of demat account. If you want to open demat account, you have to provide your PAN. If you are paying a bill to a hotel or restaurant, one-time bill in cash more than 50,000. So if you are making payment to restaurant in cash for more than 50,000 rupees, then you have to provide your PAN to the hotel or restaurant. If you are traveling to foreign country and if you are purchasing any foreign currency and the purchase of foreign currency at single time is more than 50,000 and you are making for conversion of that currency and the payment of cash is more than 50,000, then also mentioning of PAN is mandatory. If you are purchasing mutual fund of an amount exceeding 50,000, then PAN is mandatory. If you are purchasing any debenture or bond amounting to more than 50,000, then also PAN is mandatory. If during any one day, during a single day, if you deposit more than 50,000 in your bank account, then also PAN is mandatory. If you are purchasing any bank draft, DD or pay order amounting to 50,000 or more in any one day, and for that, if the payment in cash is made, then also the PAN is mandatory. Say for example, if you want to make a DD, that is demand draft, and for the demand draft you are paying 60,000 to the bank in cash, so it is more than 50, then your PAN is mandatory. If you are making bank deposit amounting to 50,000 or more, or if your aggregate deposit is more than 5 lakh, then also PAN is mandatory. If you are purchasing any prepaid payment instrument, say for example, if you are traveling to foreign currency, then there is one international card you can take from the bank, but for that card you have to make the payment first, and whatever amount is eligible in your card, you can spend that amount. So for that purpose, if you are making payment in cash to the bank more than 50,000, then also PAN is mandatory. If you are paying life insurance premium more than 50,000 during the financial year, PAN is mandatory. If you are selling any securities amounting to more than 1 lakh rupees per transaction, then PAN is mandatory. If you are purchasing any securities or share of a company not listed on a stock exchange and the amount of per transaction is more than 1 lakh, then PAN is mandatory. Sale or purchase of any immovable property. If you are purchasing any immovable property and the value of that property or stamp valuation is more than 10 lakh rupees, then mandatory you have to report your PAN. If you are selling any goods or services and the amount of that goods or services that is per transaction is more than 2 lakh, then PAN is mandatory. Clear? In case of minor, the PAN of guardian, that is PAN of mother or father or legal guardian, is compulsory if the minor is entering into above transactions. Now, say for example, if you are not having PAN because you are non-resident in India, then you can make a declaration in the prescribed form, either electronically or in paper form, notified by the CBDT. Because taking PAN is not mandatory in case of non-resident. Or in case of central government, state government, if they are entering into the above transaction, then PAN is not mandatory. Now the definitions are given. What is the meaning of payment in connection with travel? So it is the fare charges, tour operator charges, right? Tour agent or tour operator means the person who make the all arrangement for your foreign travel. Time deposit means a deposit repayable after fixed period. Say for example, 1 year, 2 year, 5 year. Now, if there is any change in or name in PAN, say for example, after marriage, the name of girl child change, right? Surname is change. Yeah, say for example, if you buy a new house, then address also change. Then you have to intimate such change to the assessing officer, and you need to make necessary changes in your PAN also. For entering into the transaction, if you are entering into the transaction with bank, then you have to provide your PAN to the bank. Intimation of PAN to person deducting or collecting tax at source. So someone is deducted your tax, then you have to provide your PAN to the payer, right? Quoting of PAN in certain document. In following document, your PAN is you have to mention your PAN compulsory. So in case the statement furnished under section 192(2)(c) giving particular or profit in lieu of salary, that is, if say for example, if Form 12 BA in all the certificate of taxes deducted issued by person. So in TDS chapter, we have discussed that the payer will issue certificate to the payee about the deduction of tax, right? Form 16. So in Form 16 also, 16A also, the PAN of the payee should be mentioned. All the return filed by you to the income tax officer without the mention of PAN, the return filing is not possible. Okay, so you have to mention your PAN on the return. Same is with the case of TCS. If someone is collecting tax on your behalf and deposit the same to the government, then the seller will provide you the certificate mentioning your PAN on the certificate. If you are not having taxable income, or if you are not required to obtain PAN, that is, say for example, if you are non-resident and it is not mandatory for you to obtain the PAN, then on the above document, the PAN is not required to be mentioned. Interchangeability of PAN with Aadhaar number. If you are not having PAN and if you are having Aadhaar number, then you can mention your Aadhaar number instead of PAN. In case you are not having PAN but possess the Aadhaar number, or if you are not having Aadhaar number but having PAN, you can alternately mention PAN instead of Aadhaar number. Quoting and authentication of PAN or Aadhaar. See, I guess I don't know about you, but before 3-4 months, in the month of March 23, everyone is rushed to whether their PAN is linked with Aadhaar or not. Okay, so you have to match your Aadhaar and PAN data. If there is any mismatch, then you have to correct that mistake. Say, for example, there is some name mismatch or birth date mismatch as per PAN and as per Aadhaar, you have to authenticate and you have to correct both. Otherwise, your PAN is not linked with your Aadhaar, and we'll discuss later on. Your PAN will become inoperative if it is not linked with the Aadhaar. So you have to link your PAN with your Aadhaar number. The CBDT is empowered to make rules with regard to the following: the form and manner in which an application for PAN may be made and particulars to be given. There is a form 49. You have to find form 49 for application of PAN. You have to mention your name, your address, your date of birth, and you have to provide supporting documents for like Aadhaar number, etc. Such class or class of person to whom this provision is not applicable. Say, for example, non-resident. If you are non-resident in India, no need to apply for the PAN. So CBDT has power to provide all the data. Voting of Aadhaar number. Every person who is eligible to obtain Aadhaar number. Yes, Mohammed. Is required mandatorily to hold Aadhaar number. Say, for example, if you want to apply for PAN card and if you are already having Aadhaar number, then you have to provide Aadhaar number in the application form for allotment of PAN. See, in form 49, that is the allotment of PAN application, the mentioning of Aadhaar is mandatory, or in the return of income also. Without return, see, while filing return of income, in the return of income, you have to provide your PAN compulsory. Okay, with effect from 1st April 2019, without providing your Aadhaar in your return of income, you cannot file the return of income. So you have to provide your Aadhaar number in your return of income. If, say, for example, Aadhaar number is not there and you are applied for Aadhaar number, then there is one enrollment ID is given by the Aadhaar authority. Okay, so you have to provide that 28-digit enrollment identification number till the time you are not received your Aadhaar number. Intimation of Aadhaar number to prescribed authority. Now, every person who has been allotted PAN as on 1st July 2017 and who is eligible to obtain Aadhaar number shall intimate his Aadhaar number to prescribed authority, that is to Income Tax Department, on or before 31st March 2022. The date is extended to 31st March 23 until further 30th June 23. Okay, so if you are having PAN and if you compulsorily have to apply for Aadhaar number, then you have to provide your Aadhaar number to Income Tax Department compulsory up to 31st March 22. Now, what are the consequences if you fail to intimate your Aadhaar number to Income Tax Department? Now, say for example, if you fail to provide your Aadhaar number to Income Tax Department, then your PAN become inoperative, and without PAN, now if your PAN become inoperative, so you cannot file the return. And if you have already filed the return, after filing return, your PAN become inoperative. So the government will not release your refund. You cannot make payment of taxes. You cannot use that PAN for the above transaction, and for certain transaction PAN is compulsory. You have to provide the PAN. You cannot enter into that transaction with the Aadhaar number, and that criteria is as per the bank. So if your PAN is inoperative, you are not able to file return, you are not able to claim refund, you are not able to pay taxes. Okay, so you have to intimate your Aadhaar to the Income Tax Department before 31st March 2022. 2. Now, if you are informing to the government about your Aadhaar after 31st March 22, you have to pay fees of rupees 1000 under section 234H. Under section 234H. After payment of that fee and after linking of your Aadhaar with the PAN, your PAN again will become operative. Okay. Now this Aadhaar PAN linking provision is not applicable to certain class of person notified by the CBDT. That we will discuss, to whom the linking of Aadhaar PAN is not compulsory. Now, as I said earlier, if PAN of a person has become inoperative, it is become inoperative because of non-linking of Aadhaar PAN. So he will not able to furnish or intimate or quote his PAN and would be liable to all the consequences under the Act. You see, if you are not mention your PAN for certain transaction, then there is a penalty. Okay, so you have to pay that penalty. You are not able to file your return pending return will not get processed, so you will not get the refund. Your return is considered to be a defective return once the PAN is inoperative. Your TDS is deducted at higher rate because your PAN is inoperative, so it is considered to be that you have not provided your PAN to the payer, so payer will deduct TDS at higher rate if your PAN is inoperative. Okay, so there are so many consequences. So this all is become effective with effect 31st March 23. The date of 31st March 23, 22 is extended to 31st March 23. You can pay additional fees of rupees 1000 and you can after 31st March 22 you can pay additional fees of rupees 1000 under section 234H and link your Aadhaar with the PAN so that your PAN is continue to be operative. Now, to whom this provision is not applicable, that is linking of Aadhaar PAN is not mandatory in the following cases. If you are resident in Assam, Jammu Kashmir and Meghalaya, then Aadhaar PAN linking is not mandatory. If you are non-resident as per Income Tax Act 1961, because in case of non-residency, for example, if you are staying in the USA since 20 years, then you don't have any Aadhaar in India, right? So without Aadhaar, how can you link Aadhaar PAN? A person of the age of 80 year or more, because they are aged to avoid genuine hardship to them, it is not mandatory. A person who is not a citizen of India, Aadhaar PAN linking is not mandatory. There, everyone. Everyone clear? Everyone clear? Yes or no? Please reply fast. So as I discussed earlier, if up to 31st March 22, if you are not link your Aadhaar with the PAN, then after 31st March, you can link your Aadhaar with the PAN after paying 1000 as fees under section 234H. If you are if you link your Aadhaar after 31st March 2022, but before 30th June 22, then the late filing fees is 500, and after that it is 1000 rupees. After that it is 1000 rupees. Clear? Now let's have a break of 10 minutes. After that, we'll discuss the scheme for submission of return through tax return preparers. Okay. Yeah. Mohammed, see, for unexplained income, the government will always have a power to ask to issue the notice. So, while filing updated, you cannot say that I have filed updated return, so you cannot question the unexplained income to me. It is obviously there, and if it is an unexplained, the government will levy interest, penalty, etc. on that income. Clear, Mohammed? Yes or no? Mohammed reply yes or no. Scheme for submission of return through tax return preparers. Now, say for example, the tax return preparers will assist you to file your return of income. Okay. So, this section provides that for the purpose of enabling any specified class of person, say for example, say everyone is not obtaining the services of chartered accountant for filing the return of income, or advocate, or so they can obtain the services for filing the return of income of tax return preparers. Any individual can become tax return preparers after passing one examination, and if he or she has a certain qualification mentioned in the scheme, they can apply for tax return preparers. Okay, so now we will discuss who will become the tax return preparers and who are eligible to file their return through income tax return preparers. Okay. So the tax return preparer shall assist the person furnishing return in the manner that was specified in the scheme, and shall also affix his signature on the return. Okay. So if you are filing, someone is helping to file the return of income as tax return preparer, then in the return of income, they also have to fix their signature. Now, who can be a tax return preparer? So tax return preparer can only be an individual other than, so these are not considered as tax return preparer. Okay. So who are not considered as tax return preparer? Any officer of scheduled bank with which the assessee maintain current account or has other regular dealing. So if assessee is maintaining account with the Bank of Baroda, then the officer of that Bank of Baroda is not act as the tax return preparer for that assessee. A legal practitioner, that is an advocate, who is entitled to practice in any civil court in India. An accountant, it includes chartered accountant, employee of specified class or class of company, who has been authorized to act as tax return preparer under this. Now, what is the meaning of specified class or class of person? For this purpose means any person other than company or person whose accounts are required to be audited under section 44 AB. That is, if your books of accounts are audited, then see, if your books of accounts are required to be audited, then you cannot file your return of income through income tax return preparers. Okay, in that case, you have to file your return by yourself or with the help of your chartered accountant. The scheme notified under the said section, because CA itself can help to file the return of income, they no need to obtain the separate certificate to act as tax return preparers. That's why. The scheme notified under the state section may provide for the following: the manner in which and the period for which the tax return preparer shall be authorized, the educational qualification and other qualification who can be considered to be a tax return preparers, what are the code of conduct for tax return preparers, what are the duties and obligations of tax return preparers, the circumstances under which the authorization given to tax return preparers may be withdrawn, and any other relevant matter. Accordingly, CBDT has exercised in power conferred by this section framed the income tax return preparer. Now the applicability of the scheme. So the scheme is applicable to all eligible person. Eligible person means individual or HUF. So in individual and HUF only file their return with the help of tax return preparers. So company, partnership, firm, they are not eligible to file their return through income tax return preparers. It is for small return only. Now, who can be considered as tax return preparer? So an individual who has been issued tax return preparer certificate. Okay, for that you have to obtain certificate, you have to pass one examination, and your qualification should be any bachelor degree from the recognized university. And you will get the unique identification number of as tax return preparer. You have to mention that number while filing return of assessing. However, this is important. This we have already discussed. The following are not considered to be income tax return preparers. Now, educational qualification for tax return preparers. So, an individual who hold the bachelor degree from recognized university or institution or has passed the intermediate level exam conducted by CACS CWA. So, if someone is intermediate pass student and he want to obtain that tax return preparer certificate, he can. But after becoming CA, he has to surrender this certificate. Okay, because as a chartered accountant, you cannot act as tax return preparers. You know, it is this small job. It is for those who are just graduated and for their employment purpose, government is generated. Just like GST, there is one, the same scheme was there in GST also. Preparation of and furnishing the return of income by income tax return preparers. The eligible person may at his option furnish his return of income under section 139 for any assessment year after getting it prepared through tax return preparer. So you can take the service of tax return preparer for preparing your return. Okay, the return is to be filed by yourself by your login of income tax, but with the help of income tax return preparer. And in your return, the detail, if the return is prepared by income tax return preparer, then the detail of income tax return preparer should be mentioned in your return. However, following eligible person cannot furnish return through tax return preparers who is carrying out business or profession during the previous year and account of the business or profession for that previous year are required to be audited under section 44AB or under any other law for the time being in force. So being an individual, if you are having business income and if your books of accounts are audited under the Income Tax Act, if your books of account are required to be audited under Income Tax Act, then you are not eligible to file return through income tax return preparers or who is not resident in India during the previous year. And in case of non-resident also, income tax return preparer cannot file their return. An eligible person cannot furnish a revised return of income for any assessment year through tax return preparer unless he has furnished the original return. So if you want to file the revised return through income tax preparer, then original return should be filed through the same income tax return preparers. if the original return is filed by you and now you want to make the revised return through tax return preparers, you cannot do that. Okay, so tax return preparer can furnish revised return only if the original return is furnished by that tax return preparer. Okay, clear everyone? Let us discuss illustration number 3. Mrs. Hetal, an individual engaged in the business of beauty parlor, has got her books of account for the financial year ended 31st March 23 audited under section 44AB. Her total income for the assessment year 23-24 is 6,35,000. She wants to furnish her return of income for assessment year 23-24 through a tax return preparer. Can she do so? Shall everyone give me an answer? Can Mrs. Hetal file her return of income through tax return preparers? If yes, then why? If no, then why? Shall everyone reply fast? Can Mrs. Hetal file her return through income tax return preparers? Yes or no? No, she cannot file. Why? Because her books of account are required to be audited under section 44AB. And if your returns, if your books are audited under section 44AB, then in that case, you cannot furnish return of income through tax return preparer. Krishna, this provision is for tax return preparers. After completion of my lecture, you can uh, check it from YouTube for detailed analysis. So income tax return preparers are an individual who help you to furnish the return of income, who can be an income tax return preparer. So individual can be act as income tax return preparer, and if a chartered accountant officer of a scheduled bank cannot act as income tax return preparers, legal practitioner cannot act as income tax return preparers. Okay, very good. Power of CBDT to dispense with furnishing document etc. with the return and filing of return in electronic form. Now onwards, the return filing is mandatorily, you have to file the return electronically. Okay. So no need to upload all the statements, no need to upload all the bank statement, all the expense voucher, all the receipt bills, etc. along with your return. Okay. You just have to provide the information about your income, about your sale, about your turnover, about your gross receipt in the return of income and the auditable. Okay, but on demand, say for example, if the income tax department issue a notice that provide the bill of all the bills of your sale, then you have to provide. So on demand, whatever the statement, whatever the documents are asked by the department, you have to provide the same to the government. But along with return, no need to file the documents such as your expense detail, your bank statement, your bills, etc. Okay. So the documents, receipt, certificate, audited report, which may not be furnished along with the return of income in electronic form, but have to be produced before assessing officer on demand. If they demand, you have to produce that. Now, who is authorized to verify your return? That is sign, verify your return. So in case of individual himself, yes or no, you yourself need to verify your return. Now, where the individual is absent, then in that case, obviously he can do that through electronic mediums. You can verify your return through net banking, through Aadhaar OTP from any time at anywhere. So you can do that. Or if that is not possible, then a person duly authorized by him in this behalf, holding a valid proof of power of attorney. So if you are giving power of attorney to someone else for verifying your return, then in that case, he can do that. If an individual is mentally incapacitated from attending to his affair, then in that case, his legal guardian or any person competent to act on his behalf can verify his return. Where for any other reason, it is not possible for individual to verify the return. So in that case, a person authorized by that individual holding valid power of attorney can verify the return. In case of Hindu undivided family, who can verify the return? So the Karta. If Karta is missing, is absent from India, then any other adult member of HU. And if Karta is mentally incapacitated, then any other adult member of HUF can verify the return. Now, who will sign or verify the return of company? So in case of company, the managing director of the company can verify the return. Where for any unavoidable reason, the managing director is not able to verify the return, then or when there is no managing director, then any other director can verify the return, or if there is no director, then any other person prescribed for this purpose by the company can verify the return. Where the company is not resident in India, then a person who holds the valid certificate from the board of director along with the valid power of attorney can verify the return. Where company being wound up or where any person has been appointed as receiver of asset. See, if the winding up of company started, then in that case, the liquidator is eligible to verify the return. Where the management of company has been taken over by central government or any state government under any law, then principal officer of the company. Where application for corporate insolvency resolution process has been admitted by the adjudicating authority. If the company went into insolvency or bankruptcy, then insolvency profession appointed by the adjudicating authority will verify the return. In case of firm, the managing partner will verify the return. Where managing partner is not available or there is no managing partner, everyone is managing partner. Yes, Muhammad. Then any partner of the firm can verify the return, but partner should not be a minor. LLP, the designated partner, when designated partner are not available or there is no designated partner, any partner of the LLP or any other person prescribed by the LLP can verify the return. In case of local authority, the principal officer will verify the return. In case of political party, the chief executive officer of that political party, known as secretary, can verify the return. Any other association, any member of that association can verify the return. Any other person, the person or some other person competent to act on this behalf can verify the return. Everyone clear up till now? Now let us discuss the self-assessment, section 140A. Where any tax is payable on the basis of any return required to be furnished under inter alia section 139 after say for example, I'm just considering one example. Say for example, on your taxable income, your actual tax liability comes to, say, for example, 1,20,000. Without verification of return means you are signing the return, you are informing government that the information mentioned in the return are true and correct. If the return is not verified, then the government will not process your return and it is considered to be you have not filed the return. So that's why signature is mandatory. Na? I am certifying that the given information in the return is true and correct. Otherwise, anyone can file on my behalf. Clear, Mohammed? Mohammed, if you get your answer, please reply whether clear or not. Now, say for example, on my taxable income, my actual tax liability comes to 1,20,000 as per the tax calculation. Now, 60,000 rupees TDS is deducted by the payer for that financial year. And say, for example, 20,000 I have deposited as advance tax. So 20,000 is advance tax. Now, balance 40,000 I need to pay to the government. Yes or no? Because my tax liability comes to 1,20,000. On my behalf, I have already deposited to the government 80,000 rupees. So balance 40,000 I need to pay to the government. Okay. This 40,000 I will pay at the time of filing return of income. That is in assessment year. That is in assessment year. So it is called, this 40,000 is called as self assessment tax. So after taking into account the credit of TDS, advance tax, any MAT credit, any relief under section 89, whatever amount you need to pay to the government in the assessment year for the income earned in the previous year, that is called as advance self-assessment tax. Clear, everyone? If you want to write this, I'll give you 1 minute. Just write down so that you will remember at the time of revision. Done? In return, while filing the return, you have to mention the proof of payment. That is, you have to provide the detail of challan number, the date of payment, the amount of payment, etc. Order of adjustment of amount paid by assess. If you are paying self-assessment tax, then the tax should be first adjusted against the fees payable. If there is any late filing fees is there. Then towards interest, if there is any interest liability against under section 234B A, B, C, then the amount paid as self-assessment will first adjusted against late filing fees, against interest, and balance is against the tax paid. Now interest under section 234A. So I have already explained how to calculate interest under section 234A after taking into account advance tax, TDS, relief, everything. You have to calculate final tax liability. If you are paying that tax liability after the due date of return filing, then you have to calculate interest under section 234A. 234B we already have discussed in the last lecture. If you fail to pay any interest or any tax or any fees, then you are considered as assessee in default and all the actions are taken against under the Income Tax Act for the non-payment of taxes, recovery of taxes. Okay. So this is the recap of what we have discussed. Up till now, everyone clear? Yes or no? Please reply fast. Up till now, everyone clear? Please reply fast. Okay. Now we have discussed the updated return, the concept of updated return. Now, what is the tax on updated return? As I discussed earlier, you have to pay additional tax on updated return. See, if no return is furnished earlier, say for example, for earlier year, the due date for filing return of income under section 139(1), that is original return, and 139(4), that is belated return, has expired. Now you are filing updated return. Now you are filing an updated return. Then what happened, my dear friend? Say for example, earlier there is no return filed. So while filing updated return, you have to calculate your tax liability. You have to calculate your tax liability. From that tax liability, whatever amount you have already paid as advance tax, you have to reduce from that. Whatever amount of tax deducted, you have to reduce from that. And the balance, whatever amount left, you have to pay that amount along with late filing fees, along with additional tax, and along with the interest. Okay, say for example, the due date is 31st July 23, and I am filing the return on 31st July 24. Okay, then I have to pay interest under section 234A for 12 months. So while filing the updated return, I have to pay my basic tax liability plus late filing fees of 5,000 or 1,000 plus interest under section 234A plus if there is a shortfall of advance tax payment, then interest under section 234B and 234C. And I have to provide the proof of payment of such tax along with updated return, that is the challan number, the date of payment, the name of bank from which the payment has made. Okay. Now say for example, if the return has already furnished earlier and now I want to increase my income, okay, in the updated return. See, I cannot decrease my income because of decreasing income. There may be a result of refund. So if the refund arises, then I cannot file the updated return. So say for example, if earlier return is furnished and because of error in earlier return and the due date for filing revised return has expired. So if the return is filed as updated return, then whatever I have to calculate the revised tax liability on the income provided in updated return, and I have to recalculate the tax liability. See, whether you are filing updated return as original return or if earlier return is filed and you are filing updated return, you need to pay additional tax under section 140B. Okay, so for if earlier return has filed, I have to recalculate the tax liability. From recalculated tax liability, I will reduce the tax collected at source, the self-assessment tax paid in earlier return, TDS, the tax credit, whatever is that, I will reduce from that. And if there is any tax payment is pending, then I have to pay that. Now I have to pay additional tax on in at the time of updated return. I have to pay additional tax at the time of, along with my original tax liability, I have to pay additional tax. Say for example, my original liability while filing updated return comes to 1 lakh, and I am filing updated return after end of assessment year, but before completion of 12 months from the end of relevant assessment year. So say for example, for assessment year 23-24, if I am filing return up to 31st March 24, then along with this actual tax liability, I have to pay interest plus late filing fees. Okay, so say for example, it comes to 1 lakh, and over and above this 1 lakh, I need to pay 25% of tax and interest payable as additional tax. Now, say for example, at the time of filing updated return, my liability comes to 1 lakh rupees, including interest and everything. So I have to pay 1 lakh plus 25% of 1 lakh, that is 25,000 as additional tax. If I am filing updated return up to 31st March 24. If I am filing updated return up to after 31st March 24, but before 31st March 25. After 31st March 24, but before 31st, see, I can rectify the return only. Sorry, it is 25 and it is 26. Only 24 months. If there is a refund, then you cannot file the updated return. So maximum I can file the return, updated return up to 31st March 26 only, right? That is 24 months from the end of relevant assessment year. So say for example, if I'm filing the return after 31st March 25, that is after 12 completion of 12 months from the end of relevant assessment year, but before completion of 24 months from the end of relevant assessment year, that is before 31st March 26. If I am filing return, then along with the one tax of 1 lakh rupees, I need to pay 50% additional tax. So 50,000 I need to pay as an additional tax. So it is always and always and always advisable to pay file your return within due date. Yes, yes, Rama. You have to pay 25% on original tax plus interest. The CBDT has power to provide the guideline for removing the difficulties for calculation of taxes, obviously. Interest under section 234A is also leviable if there is no return is filed, earlier no return is filed. If earlier return is filed, then there is no interest under section 234A is applicable. Clear? If 230, if we have earlier filed the return of income, then also after taking into consideration the additional income offered in updated return, there is interest. We have to recalculate the interest under section 234C. Is that clear, everyone? Let us go through the statutory updates for this. So in the detailed list we discussed for mentioning of for in cases where the application of PAN is mandatory. So there are two additional points in that. If every person who intend to deposit cash in his one or more account with the banking company and the aggregate amount of cash deposit during the financial year is more than 20 lakh rupees, then at least 7 days before the date on which the deposit limit exceeds the 20 lakh, you have to apply for PAN. Okay, so during the year, if your cash deposit in your bank accounts are more than 20 lakh rupees, then when you feel that the deposit will exceed 20 lakh before 7 days, you have to obtain for you have to make an application for PAN. Now again, it is for deposit. The same is with same is with the case of withdrawal also. So if during the financial year, if you are withdrawing 20 lakh or more from your bank account, then you have to apply for PAN. Any person who intend to open current account or cash credit CC account in bank, then they have to obtain the PAN before at least 7 days before the application for opening of such account. Voting and authentication of PAN or Aadhaar by certain person. Everyone, if you are having any doubt, please let me know. So now in following three transactions, you have to mention your Aadhaar or PAN while entering into the transaction. So cash deposit amount aggregating 20 lakh or more in a bank. So you have to provide your PAN or Aadhaar to the bank or cooperative bank. If you are withdrawing more than 20 lakh during the financial year, then also you have to provide your PAN or Aadhaar to the bank. If you want to open the current account, then also you have to provide Aadhaar or PAN to the bank. Okay. Now the date on which the PAN become inoperative. So earlier it is 31st March 22. After that, you can. Now, if your PAN become inoperative, then how can it become again the operative? So you have to pay additional fee under section 234H, right? Within 30 days from the intimation of Aadhaar PAN linking and this fees under section 234H, your PAN will become operative. Consequences for failure to intimate the Aadhaar, so you will not get the refund. Interest. See, if there is a refund, then government will give interest on that refund. So you will not eligible for interest for that period, the period in which your PAN become inoperative. So you will not get the interest on refund for that period. The payer will deduct TDS at twice rate under section 206AA and 206C. Now, the circular is effective. The circular on 28/3/22 comes. If your PAN become inoperative, you can continue. You can pay 1,000 rupees late fees for operating your PAN, and your PAN will continue to operative by intimating Aadhaar. But see, after paying this 1,000 rupees fees, you have to intimate your Aadhaar number number with the PAN. Then only your PAN will become operative. Otherwise, see, just making the payment will not make your PAN operative. You have to intimate your Aadhaar number to the PAN. So you have to link your PAN along with your Aadhaar. Only after that your PAN will become operative. Okay. Just quickly let us discuss the question answer given. Everyone clear with the chapter? Yes or no? Please reply fast. After that, we'll discuss the practice question. If you are paying excess to the government, then government will pay 6% per annum interest from 1st April of the assessment year to the date of refund to you. Because you are paying excess tax to the government, that's why government is paying interest to you on that excess payment of tax. Clear, Joy? Sure. Let us discuss question number 1. State with reason whether you agree or disagree with the following statement. A return of income of limited liability partnership could be verified by any partner. True or false? Agree or disagree? Chalo, everyone, agree or disagree on the first statement. Chalo, chalo, reply karo. Everyone, reply fast. Yes or no? Yes or no? So the return of LLP should be verified by designated partner. The other partner can verify the return only and only in case, due to unavoidable reason, the designated partner is not available, or when there is no designated partner. Then only any other partner can verify the return. Otherwise, designated partner should be verify the return. Time limit for filing return under section 139 subsection 1 in case of Mr. A having total turnover of 160 lakhs, 100 lakh received in cash for the year ended 31st March 23, whether or not opting to offer presumptive income under section 44 AD is 31st October 2023. Shall agree or not? Shall on second point, agree or not? Mr. X is having turnover of 1 crore 60 lakh rupees, and they are saying that whether or not he is opting for presumptive taxation, the due date for filing return of income is 31st October. Is it true? Yes or no? Rama, here the question is not for payment of advance tax. The question is whether the due date for filing return of income. Due date for filing return of income. Disagree, right? If he is opting for presumptive taxation, that is 44 AD, then his books of accounts are not required to be audited. Then the due date is 31st of July, right? But if he is not opted for presumptive taxation and his books of account are required to be audited, then the due date is 31st October. Question number 2, Mr. Vineet. Submit his return of income on 12 September 23 for assessment year 23-24, consisting of income under the head salary, house property, bank interest. On 21st December 23, he realized that he had not claimed deduction under Section 80 TTA in respect of his income on saving bank account. He wants to revise his return of income. Can he do so? Yes. Up to 31st December 23, he can file the revised return. Even the belated return can also see. The original return is filed after due date. The due date for original return is 31st July 23, but he has filed return on 12 September 23. That is after the due date. Belated return can also revise, but up to 31st December 23 only. Would your answer be different if he discovered omission on 21st March 24? Yes, he cannot. If the mistake is realized on 21st March 24, then he cannot file the revised return because the due date for filing revised return has expired. Right? Everyone clear with illustration number 2? Yes or no? Everyone is clear with illustration number 2? Yes or no? Question number 3. Examine with reason whether the following statement are true or false with regard to provision of Income Tax Act. Assessing officer has power inter alia to allot PAN to any person by whom no tax is payable. Yes, assessing officer has power if he is of the opinion that the allotment of PAN is mandatory to that person, then he can do so. And for application of PAN, income or tax payment is not mandatory. Where the Karta of HUF is absent from India, the return of income can be verified by male member of family. False. Where Karta is absent from the India, then return can be verified by adult member of family. An adult member can be a male or female, not just the male member of the family. Yes or no? Explain the term return of loss. Can any loss be carried forward even if return of loss has not been filed as required? No, return of loss means if you are having loss under various heads, then the return is considered to be return of loss. And if you want to carry forward, then you have to file the return within due date. Only two losses, that is loss from house property and loss due to unabsorbed depreciation, can be carried forward if the return is filed late. Sure. Question number 5. Mr. Akash undertaken certain transactions during financial year 22-23, which are listed below. You are required to identify the transaction in respect of which quoting of PAN is mandatory. First is payment of life insurance premium of 45,000. See, the life insurance premium is less than 50, then PAN is not mandatory. Mentioning of PAN is not mandatory. Payment of 1 lakh to 5-star hotel for stay for 5 days with family, out of which 60,000 was paid in cash. Yes. In second case, it is mandatory because the single day payment was more than 50,000 in cash. Payment of 80,000 by ECS through bank for acquiring demand arrears. If you are purchasing any securities and the amount is more than 50, then you have to provide your PAN, irrespective of the mode of payment. Payment of 95,000 by account pay check to Thomas Cook for travel to Dubai for 3 days to visit relative. So in that case, no. It is not mandatory to mention the PAN because the payment is through account pay check and not in cash. Apply to SBI for issue of credit card. Yes, obviously, if you are applying for credit card, you have to mention your PAN. Clear, everyone? Yes or no? Please reply fast. After that, I'll end the session. Everyone clear with the chapter? Please reply fast. Okay. Have a good day, everyone, and all the best for your exam. Do your best. Thank you.